presentation and educate us on the topic. So my name is Bob Kane. I'm the business unit leader for Build Tools. And during this process, Russ is going to really teach us some good business practices. And then at the end, we'll talk a little bit about how Build Tools ties into this and some good training that might be of use of your time moving forward. So without further ado, I'd like to introduce Russ. Thanks, Russ.
Thank you, Bob. Welcome, everyone. And let's kick off by just sharing a quick video with you guys.
I imagine that right now you're feeling a bit like Alice, tumbling down a rabbit hole. You could say that. I can see it in your eyes. You have the look of a builder who accepts what he sees in his accounts because he expects everything to be okay. Unfortunately, this could not be further from the truth. Do you know how much money you're making? No. Why not? Because my financial reports make no sense. They're up and down. I know exactly what you mean. Let me tell you why you're here. You're here because you need to know something. What you think you know, you can't explain, but you feel it. You feel it every time you look at your accounts. You feel there was something wrong with the balance sheet. You don't know what it is, but it's wrong, like a splinter in your mind, driving you mad. It is this feeling that brought you here. Do you know what I'm talking about? Work in progress. Do you want to know how to calculate it? Work in progress is a liability. It accumulates. Right now, we can calculate it. We don't even need all the invoices or to have paid them. You can do it every single month. When you produce your reports, when you pay your bills. It is the number that is missing from your accounts that is blinding you from truth. What truth? Other people's money, Neo. Like everyone else, you look at your bank balance. Cash accumulates due to positive cash flow. But liabilities, they also increase. Unfortunately, your accountant doesn't know how to work it out for a building company. You have to work it out yourself. This is your last chance. After this, there is no turning back. You can take the blue pill. You carry on with your head in the sand. You submit your accounts and believe whatever your accountant tells you. You take the red pill. You find out the truth. And I show you your exact financial position. Remember, all I'm offering is the truth, nothing more. Let's do it.
Hey everyone, so welcome to the presentation. My name is Russ Stephens, and today I'm going to take you through the most important number that is currently missing from your accounts. Because if your financial reports make no sense, then you can easily fix them using the new work in progress calculator inside Build Tools. Now, before we get started, I want to make sure that you can hear me okay and you can see my screen. So please go ahead, type in the chat box and just let me know whereabouts in the US you are tuning in from. I'm on the Gold Coast in Australia. Right now, I am looking out across the Pacific Ocean, but I can't see a thing because it's 5 o'clock in the morning in the middle of winter. So it's pitch black outside. So let me know whereabouts you guys are tuning in from. And just so I can get a feel for who is online with me today, can I ask you to just let me know what type of building work you are primarily focused on? We're going to be launching a poll on the screen, and just select the option that applies to you. What is your primary focus? Just so I can get a feel for who is online. Excellent. Thanks, guys. Very responsive there. Cool. So predominantly new homes. That is absolutely perfect. And I've got one more question here. I want to make sure that I'm covering the most applicable examples for you. So can you just let me know how many projects you do a year? Now, just select the option that relates to how many projects you expect to be starting this year, and that's going to enable me to make sure that I'm tailoring this presentation to be most relevant to you guys. So go ahead and just select that option. Excellent. Fantastic, guys. Cool. Very interesting. Okay, and one final question. Can you let me know what size jobs you're targeting? Now, some of you guys are primarily focused on volume, so you tend to target a lower contract value in order to keep the job simpler, but other guys might be doing more complex builds, and that has an impact on how the company's structured, because custom homes will require more problem solving throughout the build process. Now, guys, your time is valuable, and I want to make sure you get maximum value out of the next 30 minutes or so that we are going through this presentation together. So fantastic. Awesome. Excellent. So guys, from what you've just shared with me, this is going to be a real eye-opener for you, guaranteed. So let's move on and get started. Now, I'm guessing for a lot of you, this is probably not the first presentation that you've attended that told you that you need, in order to gain a better understanding of your financials, you're going to need to do that in order to improve your profitability and cash flow. So the first thing that I do want to mention is that if you have ever tried to make more money from your building company by either growing your sales or by simply putting your prices up, and maybe it hasn't quite worked out for you, then there is a reason for that. And the problem is your prospective clients, because whenever you present a proposal to a prospective client that has just a slither of profit in it, they tell you that they can't afford it. And unless you drop your price by $50,000 and agree to build their dream home below your cost price, they won't be moving forward. Now, sometimes you end up negotiating. You take things out and maybe you suggest a couple of design changes that are going to save them money, but without compromising the look. But at the end of the day, your margin gets squeezed, and you end up believing that if you don't cut your price to the bone every time you present a proposal, then you're unlikely to win the work. And that is a terrible way to run a business, especially a custom home building company. Now, before we get started, it is just really important to just take one moment, just get prepared. Now, we do recommend using Google Chrome to view these presentations. So if you do experience any sound or connection problems and you're not using Google Chrome, just try switching over, because that does seem to resolve most issues. So please, guys, turn your mobile on to silent, turn off notifications on your computer, close that office door, and even put a do not disturb note on it, and then pull out a pen and a pad and just get ready to take notes, because I'm going to be moving really quickly in order to get through everything, and I don't want you guys to miss out, because in this presentation I'm going to be demystifying your financials and exposing the dirty little secrets that are hiding inside the accounts of 95% of residential home building companies. Now, a lot of builders understandably believe that in order to win jobs consistently, you have to operate on low margins. However, those guys are always the ones that find themselves unable to grow their building companies, because when you are locked in to low margin contracts, it is impossible to invest into your building company and scale it, and you end up on the hamster wheel running along faster and faster but never quite getting ahead because you are caught in a lie. And it's a lie that keeps builders from earning what they truly deserve to be earning, given the long hours that builders put into their business and the risk that they take every time they sign a building contract. But you cannot blame the clients because they are just playing the game, and it's the one that involves your net profit. But there is a solution, and it all starts with just knowing your numbers, because if you do not know your numbers, then you don't know your business. And maybe think about your own journey. If you followed the traditional path that many of the members of the Association of Professional Builders followed, then you may have gone straight into a carpentry apprenticeship after leaving school, and from there you qualified as a carpenter and you ran your own carpentry team, subcontracting to builders as well as working directly for consumers. And after seeing firsthand how these other builders operated, you either believed that you could do a much better job running a building company, or maybe you were just attracted to the opportunity to earn more money. But either way, you took the natural step from running a carpentry team to starting a residential building company. And after successfully completing some small jobs, you gradually took on bigger and bigger projects. And now you find yourself operating one of the most complex roles available, bringing together labor and materials on a fixed timeline for a fixed budget without any formal training on pricing, scheduling, management, or even leadership. Now, there are plenty of examples out there in the marketplace of great builders who have failed at running building companies. So to make sure that you do not become another statistic, you need to fill in the gaps and learn the skills that were not taught to you as part of your apprenticeship. And that's why we're here today, because I know you want to increase profits by gaining a better understanding of your financials, and you want to be able to avoid running into any cash flow challenges that could derail your building company in the future. And the fact is, knowing the work in progress accounting adjustment figure is the key to increasing your profit margins and also maintaining positive cash flow. So that's what I'm going to take you through step by step in this presentation. But at this point, you may, or you certainly should be thinking, who's this guy to tell me what to do in my building company? So very, very briefly, guys, I started working with builders back in 2011, providing contract preparation services to custom home builders in Australia. And during this time, my daughter, Russ Stephens, was studying marketing at university, and it wasn't long into her course that she realized just how out of date the content actually was. So we discussed the future of the internet, online marketing, and just how fast it was all changing. And within a few weeks, Sky withdrew from university in order to focus on learning the brand new marketing strategies that were replacing the old school methods. And in order to put these new skills into practice, we decided to start a marketing agency for residential home builders. Long story short, things went well and the business grew, but we noticed that for a lot of builders, although we were generating plenty of good opportunities for them, they were still not closing as many of those opportunities into sales as they should have been. And that is why we decided to expand into sales training. And in 2014, we launched Acris Sales Training. Now that went phenomenally well and it grew really quickly. However, the closer that we work with these builders, helping them with generating leads and then progressing those leads into contracts, the more we realized that they were not making the kind of money that they deserved to be earning, given the amount of hours that they were putting in and also those risks that they were taking. So it became clear that they needed help with increasing their margins and also systemizing their building companies, which is why in 2015, we launched the Association of Professional Builders, a business coaching company dedicated to helping residential home builders to generate more leads, more sales, and increase their margins, all while improving the building experience for their clients. And thanks to our founding members, the APB now coaches more than 470 residential building companies worldwide who have completed over 1 billion in residential construction projects in the last 12 months alone. And additionally, we are regularly consulted by the media across the United States and Australia for our industry insights. Now, I don't say any of that to brag, but I simply want to give you guys some context for the information that I'm about to share with you. So let me share this with you. In March 2011, I received a phone call from a custom home builder who was beyond desperate because he'd just received an email from his accountant notifying him that the tax liability for his building company was a staggering $203,000. Now, on the surface, this should have been good news because if his building company was making the sort of money that generated a $200,000 tax bill, there must be plenty of cash in the bank to pay that bill, right? It just makes sense. However, this builder, we're going to call him Mike because he's still a client. I don't want to use his real name. He didn't have $200,000 in his bank account. So he asked me, why do I have such a massive tax liability and where has all the cash gone and how on earth am I going to pay this tax bill in just 2 months time? Now, these were all very good questions, especially since he was still paying off his tax bill from the previous year, which was $250,000. Now, obviously, there was something seriously wrong here because in 2 years, this builder was paying $450,000 in tax and he didn't have the cash. There were no assets like plant and machinery. There were no debtors. There were no loans to the company. Nothing made sense. However, the journey of discovery that I went on as I dug into Mike's financials, it blew the lid off the mystery surrounding construction accounting for residential home builders, and it revealed why so many custom home builders are paying tax on profits that they have never made. And now I want to share with you what I learned on that journey. And it doesn't matter if you're building in Australia, New Zealand, Canada, or the United States. It doesn't matter if you're in metro areas or rural areas, because this is crucial information that every residential home builder must know. And none of what I'm sharing with you is theory. These are all strategies that we have helped custom home builders apply to their own building companies. Builders like Jim Pitcher from CRC Builders in California. Now, Jim grew his building company from 2 million to 14 million since joining the APB, and he's now on track to do 30 million using these exact systems and processes. So, 3 things that I want to take you through today are how to predict the boom times for building companies and avoid getting caught out by the recessions that always follow, the mystery behind how a custom home builder lost 10.8% gross profit on every single project, which is the difference between workflow and work in progress, and why you could be paying tens of thousands of dollars in tax on profits that never existed. Okay, so before we get too deep into this topic, I need to explain to you why it's unlikely that your accountant knows how to do this calculation correctly. And that's not me being disrespectful to accountants. It's simply because the term originated in manufacturing. Now, according to Investopedia.com, work in progress is a calculation used to determine the value of raw materials as they pass through the manufacturing process. You see, accountants needed a way to calculate the value of all the stock for a manufacturing company, and not just the finished goods, but all the goods that were partway through the manufacturing process as well. Now, these products were not at the full value of the finished goods, and they were not at the initial value of the raw materials, because value had been added because they were partway through the manufacturing process, which is why a very smart accountant at some point in time came up with the work in progress calculation. But the problem here is that no one explained to the accountants that a building company is very different to a manufacturing company. In manufacturing, the reason for the work in progress calculation is very simple, and it makes perfect sense. But in construction, it's a little bit more complicated. We still get invoiced by our suppliers for the raw materials, and we also pay our people on site, just like manufacturing. But then we also get invoiced by subcontractors for labor and materials in arrears, sometimes very late in arrears. And we also receive stage payments from our clients, and we front load those stage payments as much as we can to help with our cash flow. So the question here is, how can you factor all of those components into your accounts? And quite obviously you can't, right? It's impossible. And that's why your accounts make no sense when you look at them. One month you look at your P&L and your profit's up here, and the next month it's way down. It might show that you've lost tens of thousands of dollars. They make no sense whatsoever. So what do we do when our accounts make no sense like that? We look at the cash position, but question is, how much of that cash in the bank is really yours, and how much is owed to all those suppliers and subcontractors that have supplied materials or done some work, but they've not yet sent an invoice? And how much exactly did you front load that contract by in the first place? Now, the answer to that last question may surprise you. However, it's not just accountants that are confused by work in progress for a building company. Builders themselves confuse this term all the time. Now, when I first started asking builders if they knew their work in progress figure, they would tell me, yeah, I've got plenty of work in progress at the moment. And it made no sense. I thought, what on earth can they mean, until I dug deeper and I realized what they were talking about was workflow. Now, it wasn't their fault. The term work in progress is very confusing. So it's no surprise that when an accountant asks the builder for their work in progress figure, what they actually get back is the amount of work that they have on their books rather than a financial calculation. And because no one really understands the difference, the accountant happily puts down the figure that the builder gives them. Now, remember Mike, the builder I told you about at the beginning of this presentation? The builder that owed $200,000 in tax while he was paying off the previous year's tax bill. Well, that's exactly what happened to him. His accountant put in the wrong figure for work in progress into his accounts at year end, which meant he ended up overstating his profits by $600,000. And that resulted in a $200,000 tax bill on profits that he never made. Now, workflow is the balance of your current contracts that have not yet been invoiced to your clients. So put another way, it is the total value of all your contracts less the amount that has already been invoiced. Now, it's an important number for builders to know and to compare to previous months, because that allows you to spot trends. It acts as an early warning system, and when it's declining, it alerts you to the fact that you may need to trim your fixed expenses because harder times may lie ahead. And of course, when workflow is increasing, it's time to think about putting on more resources to manage the increased workload before you get swamped and start drowning inside your own building company. Now, work in progress, on the other hand, is the financial calculation that needs to be performed at month end in order to correct your financial reports. Now, okay, guys, this is, excuse me, this is really important because it is the most important figure that is missing from your accounts. And not knowing this number, it silently destroys residential building companies. Now, a lot of people in business will tell you that cash is king, and that is generally true if you are a remodeler. But if you are building new homes, then focusing on the cash will catch you out big time. So let me just share a story with you, and it's something that happened on a beautiful sunny morning in September 2010. I drove down from Brisbane to the Gold Coast in Australia to perform an audit on a custom home building company. Now, these guys were one of the franchisees in a group that had operations all over Australia. And on the surface, things appeared to be going well for this franchise. They were constantly signing up new contracts, and in less than 3 years, they had grown their building companies from their building company from $0 to $6 million in annual sales. But it wasn't all plain sailing, because head office was starting to receive complaints from subcontractors who were complaining that they'd not been paid on time. Now, at first, these were just a few isolated instances, and they appeared to be related to specific instances of substandard work. However, as more complaints started to filter through, it became clear that a pattern was starting to emerge. So I was asked to meet with the two directors and audit their accounts to check if they were still solvent. And when I arrived at their offices, I remember being quite impressed with their whole professionalism, because these guys were building high-end custom homes for very successful people, and the image that they portrayed, it certainly reflected that. There were two high-performance cars out there, fully branded, being detailed in front of the offices. Off to the side was a couple of utes and another car, presumably that belonged to a salesperson. Again, all fully branded. The offices, they were clean, they were modern, they were spacious. There was a well-presented receptionist ready to meet and greet anyone that entered. And it was a far cry from a building company that was struggling to pay their bills. And that gave me a lot of confidence that the audit was going to be pretty straightforward, and I was going to be heading back to Brisbane by lunchtime. And mostly it was pretty straightforward, but there were some figures that just didn't add up, because the work in progress accounting adjustment had been added at each year end. However, it was showing as an asset on the balance sheet, and it was growing year on year. Now, as soon as I saw that, I knew something was seriously wrong in their accounts. So I said to them, I said, who calculated your work in progress figure? And they just smiled and they told me, well, the accountant asked for it at year end, but because they got no idea what it should be, he just enters his best guess. Now, I think my jaw physically dropped at that point, because I couldn't believe what I was hearing. The most important number in a building company's accounts was merely being guessed year on year, because no one knew how to calculate it. Now, on paper, this company had a net value of $550,000. However, when I calculated the true figure for work in progress, which was a liability, they were $1 million underwater. Now, put another way, in the 3 years that they had been building luxury homes, they had never made a cent. They had, in all probability, been losing money every single year, but they'd been completely oblivious to the fact, because they had cash in the bank. Now, here's the thing that most builders and even accountants simply don't understand. Building new homes is cash flow positive. Therefore, you will generate large amounts of cash that is simply other people's money. Only you'd never know exactly how much you owe, because that liability is hidden away inside your accounts. It doesn't appear on a creditors list. So on the surface, everything looks rosy. And because you've got cash in the bank, why would you think there's a problem? And this is what catches so many new home builders out, because cash flow acts as a rug, and work in progress, that's the dirt that gets swept under the rug. However, sooner or later, that rug is no longer going to cover the dirt, and the whole house of cards comes crashing down. And this is the #1 reason why building companies fail. They ran out of cash and they didn't see it coming, because they didn't know their work in progress liability. They spent the cash that they had in the bank without realizing that there were hidden creditors that simply didn't appear on the creditors list. So to put it mildly, these guys, they were in a serious situation. They now needed to inject $1 million of cash into their business in order to remain solvent. Now, when I shared that news with them, they just smiled and they said, wouldn't be a problem. They had access to more cash and they would simply transfer it into the building company. And I've got to be honest, that surprised me a bit, because I would have thought discovering a $1.55 million swing in the wrong direction in their accounts, that would have had them hitting the panic button, and certainly not considering throwing more cash into the fire. But these guys, they assured me it was all under control, and so what else could I do but leave? And 2 days later, I found exactly why they were so calm, because apparently I was an idiot. I had no idea what I was talking about, and how on earth could they be $1 million underwater? In fact, they found the whole episode hysterical, and they told head office they certainly wouldn't be pumping any more money into the business. Now, that left me with no other option other than to recommend that the franchisor terminate the franchise immediately, because their days were numbered. So they asked me, they said, how long have they got? And my best guess at the time was about 12 to 18 months, 12 to 18 months before the dirt popped out from beneath their rug and the business came crashing down around them. And that left the franchisor with a pretty tough call, because you can imagine $6 million a year in revenue, that meant a lot of royalty payments, but a franchisee collapsing, that was going to damage their brand. Well, fast forward just 9 months later, and the receivers were called in after the company was forced into liquidation by a creditor who was simply not prepared to wait for their money any longer. Now, naturally, I was curious to see the liquidator's report on the final position of the company, and it was $1.5 million underwater. So in that final 9 months, things had gotten even worse, and they'd lost another 500,000 in that period, and they didn't even see it coming. Now, you don't need to be $1 million underwater before you start calculating your work in progress accounting adjustment, otherwise known as WIPA. Every single building company needs to calculate this figure in order to produce accurate financial reports that provide them with a clear picture of the financial health of their building company, right down to the very last cent every single month. And it's not just builders that are struggling by getting caught out with work in progress. Just recently, with working with one of our private clients, we found an entry in their end of year accounts showing work in progress as a $350,000 asset. Now, this company builds new homes, so the chances of the work in progress figure being an asset was highly unlikely. So we checked it out and we found that figure should have been a $150,000 liability. Now, what that meant was the builder's net profit for the previous financial year had been overstated by $500,000, resulting in them paying $138,000 in tax. Now, they will get that money back from the tax office eventually, now that the correct work in progress figure has been inserted into their current financials. But right now, their bank balance is $138,000 lighter due to an error made by the accountant who simply guessed the number. Now, it's absolutely astonishing what is going on in our industry, and it's because most accountants and builders confuse work in progress with workflow. And let's be honest, the name itself is confusing. Work in progress sounds like it should relate to the amount of work a builder has on his books, i.e. the total amount of work remaining on his contracts, and that is why you hear builders saying things like, yeah, I'm good, I've got plenty of work in progress. And yeah, like I said, I used to wonder what on earth that could mean until I discovered that they were thinking of the wrong thing. And don't make the mistake of thinking work in progress is an asset. Now, it can be, and if you run a remodeling company, then it's quite possible your work in progress may come out as an asset. However, if you are building new homes, then the work in progress figure will almost certainly be a liability. Now, you may not want to hear that because it destroys the equity that you may have previously believed that you'd built up in your business, but at least you won't be paying taxes on profits that you never made. And guys, don't leave this calculation until year end, or even just leave it to your accountant, because like I say, most accountants have been taught how to calculate work in progress for a manufacturing company rather than a building company. And the two calculations are very, very different, and they're completely unrelated. And that's why it's so confusing for accountants. And make sure you do it every month, and make sure you submit your calculation to your accountant at year end rather than waiting or allowing them to figure it out themselves. Now, I just can't stress highly enough to you guys how important this number is. Countless builders and accountants and bookkeepers have gone through our work in progress training inside the members area, and they all say the same thing. They all stress how important this new knowledge is that they've just required, and it's information that simply is not being taught. So builders are constantly being caught out and paying taxes on profits that they never made, simply because they or their accountant did not know how to do this calculation correctly. And it's not hard to do. You simply follow a process, or you get your bookkeeper to follow a process every month, and you will have accurate accounts every single month, not just at year end, but every month. You'll know right down to the last cent how much money you're making. But guys, here's a tip for you. As soon as you calculate your work in progress accounting adjustment at month end, make sure you close off your accounts by using the system date setting in your accounting software, because what you don't want is any invoices to get added to a completed month once you've done the calculation, because it's going to throw out your numbers for the month that you're now in. The work in progress calculation is a snapshot in time. It's done on a specific date, the last date of the month, and then you lock your account. So make sure that you use that system date in your accounts. Otherwise, you'll be back to square one. Your accounts won't make sense. And it's just, that is one simple little mistake that we've seen our members do over the years. And it's easily done. And of course it is, it's very easily avoided as well. And another little tip that I want to share with you guys, and this is just from seeing our members getting caught out by doing this themselves, and that is make sure all of your supplier and subcontractor invoices are actually in your accounts before you remove the job from the monthly WIPA calculation. Because if you still have outstanding purchase invoices, no matter how long the job's been finished, it needs to be included in the monthly WIPA calculation. Now, I've seen this happen to a few builders where the concreter does an invoice for months at a time. You have to leave that job in the calculation until it's been invoiced by all your suppliers and contractors 100%, and those invoices are actually in your accounts. And again, don't do it the hard way. The work in progress accounting adjustment calculator has now been built into your Build Tools program so that you can calculate your work in progress every month from this point forward the easy way. So guys, that is the most important figure that is missing from your accounts, and also how it destroys building companies. So do you see how important it is to know this number? And can you see, guys, how not knowing it can result in you paying too much tax or even losing money without even realizing it for years? So, excuse me. Go ahead, guys, just type in the chat box, let me know who's calculating their work in progress figure every month right now, and who's going to be using the new feature inside Build Tools to calculate this figure every month from this point forward. And maybe on that point, maybe Bob, we can take a look at how Build Tools can do this calculation for the builders. Would that be okay?
That sounds great, Russ. Thank you. Let me go ahead and
see if I can, so I need to, well, first of all, I guess I need to, oh, I think presenter's been changed, is it? Yeah, cool. I didn't need to do anything.
Yep, I'm going to go ahead and share my screen now. And let me know if you see that.
Yeah, all good. I can see that.
Great, great. So, so one of the things I wanted to add as well, you mentioned maybe a remodeler may have some assets out there. There might also be some attendees that are production home builders, semi-custom home builders, where you own the land, own the entire development. You may be capitalizing costs at the end of the year, and so the exact calculation that we're going to run you through might be just a little different. So you may be tracking work in process until each job settles, and then you may be doing an adjustment over to cost of goods sold and using a capitalized inventory lot to manage that. That's okay as well. What we're specifically talking about here really is custom builders that are going through longer jobs and how to look at your financials on a month-by-month basis. So great job on that overview, Russ. So what we want to look at here is you should be able to see my screen now, and this is a login to Build Tools. And what we want to look at inside of Build Tools is Build Tools was created by a builder for builders. Originally, it was acquired by ECI last year to bring to the market, expand, and improve the product offering. Now, the main purpose behind developing Build Tools was to be able to track the job cost. And so job cost starts at the cost code level. So as you post your invoices into Build Tools, there's going to be a cost code that each invoice will be associated with. It typically matches up with a purchase order, or it can just be in there encoded with a line item that you would normally have in the budget. That invoice goes in. Now we're keeping track of each of our costs at the job cost level. We know exactly how much we're spending in the job cost. That money begins to accumulate into your system. So Build Tools was built on that concept. It keeps track of your job cost, manages your schedules, manages all communications with the owner that you're building it for, as well as all of the trade contractors. And Build Tools has a way for you to be able to bill the owner that you're building your homes for, so that you can then accept money in. Build Tools has an integration with QuickBooks Online and QuickBooks Desktop, as well as Zero Accounting, which again means you can sync together your accounting system with Bill Tools. So Bill Tools can be your construction subsidiary account in your job cost. And if we were to then look at all those details that are accumulated throughout the construction job, calculating this WIP liability becomes a lot easier because we have all the data. We have everything that we need. So after working with Russ and really understanding the WIP calculation and how important that is, we decided to go ahead and add that into Bill Tools. So this is a picture of a budget. Budgets can have multiple versions. Budgets will also keep track of actuals that come from invoices. If we go ahead back out into the main area of Bill Tools, we can then look at a list of all of our projects that we have under construction. We can narrow it down just to under construction, or we can leave it on all projects. But we've added this little button at the top right now, which says WIP Report. When you click this button, Bill Tools is then going to go through and grab all of the appropriate projects and populate a spreadsheet that Russ and the Association of Professional Builders has been using for years. So if you are currently a member of the Association of Professional Builders, this sheet probably looks very familiar to you. And if you're not, this is going to tie directly into some things that Russ is going to tell us about in just a minute. This is going to list out all of your projects, and then it's going to allow us to enter a starting margin. It's going to pull in our revised contract, our budget to build, which includes tax, our claims to date, which includes tax, any of those actual invoices, which again are invoices that we're putting through Bill Tools or into QuickBooks or Xero, and they're then showing in the Bill Tools. The percent complete related purchase invoices. We can look at our calculation, which is the all-important calculation that we're trying to get to here. We can see our profit and our margin. And then part of the journey through this is going to be what to do with the numbers now that we get them out of the system. We have data that we trust from a system that we're managing every project with, and it is now summarizing our WIPA over here, and it's giving us a little bit of a legend on the adjustment to make at the end of the month and a readjustment at the beginning on the next day. And so that all ties into some training that's going to back up everything that Russ was talking about. When the report comes out, what you can do is you can click a link at the bottom. Clicking this link is going to allow you to then open up a web page that's going to show you all of the information about what you need to learn. And Russ, if you want to talk a little bit about that and that program, I can go ahead and give control back to you.
Cool. Thanks so much, Bob. That I'll tell you guys, I'm so excited about what the guys at Bill Tools have done here. It's absolutely fantastic. We've been on a campaign really for years now, educating the marketplace about work in progress. And the guys at Bill Tools have just made it so easy. At the click of a button, you're generating all that data. It is absolutely awesome. And you can see I kind of geek out on this stuff, so I get quite excited about it. But these guys have just made it so simple. But if you guys do have any questions, please type them in, and I'll be more than happy to stay on here and answer any questions you have at all. So any questions at all, please feel free to go ahead and type them in. But while you're doing that, I do have something special for you guys. For all of those of you on this presentation who are not already members of the Association of Professional Builders, I just want to ask, how many of you guys are serious about systemizing your building companies? And how many of you are maybe keen to get started, but you don't have all the tools that you need right now in order to systemize it completely? And we get it, you know, hearing about different strategies and tactics that you need to be implementing. It can get a little overwhelming when you hear things for the first time, and especially when you start hearing them in a condensed format like this. But there's no need for you to try and figure out everything yourself on your own, because all the systems and processes that you need to generate more leads, more sales, and increase your margins, they're all available for you to download when you join the Association of Professional Builders. However, because Bill Tools is such an awesome partner to work with, and I'm so excited about what they've done in their software, I want to thank them by giving you guys something that our members have found extremely useful. So What I would like to make available to everyone on this presentation is the work in progress training course, so that you can share this information with your bookkeeper or your admin assistant. Because while it's great having this calculator built into Build Tools, you need to provide the why to your team so that they understand why this number is just so important to get right. And as you can see, this is the course that we built, and is currently being sold on our website for $497. However, because you guys have made the effort to join us live today, I want to give this course to each and every one of you completely free of charge. No catch. You just use the special link that is going to appear in the chat box right now, and that will magically discount the price by 100%. So go ahead, guys, and help yourself to that with our compliments, because that is great information that you can pass on to other members of your team, and you've got it free for life there. It doesn't go away, so it's a great training portal that you can have in the background, and obviously your team can use that at any time. You can make it part of your whole training process. So do we have any questions at all, Bob?
We do. So question came in, we file our taxes on a cash basis. Can we use WIP adjustment when filing on a cash basis?
Oh, sorry, can we use the WIP adjustment on a cash basis? Well, the WIP adjustment is an accrual accounting adjustment. So if you are filing your accounts on a cash basis, then you're not going to be able to use accruals. So my question to you would be, why are you filing your accounts on a cash basis? That's fine for a very, very small business, but not for a building company, especially if you're doing new homes. Now, that's probably an important question. Maybe if you can let us know if you're doing new homes or not, because like I say, remodeling, it typically works out to be an asset. So filing on a cash basis could work in your advantage. But if you're doing new homes, you definitely want to be doing accrual accounting. And really, to produce accurate accounts, I'd always be going for accrual accounting anyway. Otherwise, yeah, the accounts doing it on a cash basis, they're just kind of all over the place. So yeah, hopefully that answered your question, but pure and simply, it's an accrual adjustment. So it's you're not going to be able to use it if you're filing on a cash basis.
Excellent. We do have another question here. How do you handle known cost overruns in Build Tools? So Build Tools has the ability of coming up with an initial budget, and then as you go through the bidding process, which is contained in Build Tools, and the internal estimating process, which you can also use within Build Tools, your budget becomes more and more firm as you go. Now, when you incur costs, that will then apply to each line item that you have in the budget. Now a known best practice for Build Tools is to be able to issue a purchase order, and those purchase orders should be able to lock in your cost for the individual line items. It's a great question because we are in a point in time right now where costs are sort of all over the board. A lot of them are skyrocketing. So even purchase orders are challenging sometimes to be able to lock in those costs, especially for the commodity cost change type of products like lumber. So what you would see inside of Build Tools is you could actually enter the invoice as an overage. And what that will do is that will sustain the actual budget amount that you have. And then your invoice would then go over, which would show you a variance line item on that particular budget line. And then there's a whole nother conversation as you go to then apply for money from your owner back or apply from the bank on how that works into your business model. But it will clearly show you a budget versus actual, whether you are right on, under, or over budget. All right, looks like we have a few more questions coming in. So please go ahead and use your use the questions box at the bottom, and feel free to go ahead and add more questions into the system for us. And we'll just go ahead and go down here one by one. So a lot of thank yous out here, Russ, for making that free. A lot of people appreciate it.
Cool. I just want to check that the link is working for everyone, because I think I saw a note where someone had a bit of problems. So yeah, I just want to make sure that that is working for everyone.
Oh, good point. The link inside of Build Tools, if you have Build Tools, works great. The link we put into the chat looks like it is not working. So we will go ahead and adjust that. Just give us a few minutes here to adjust that.
I've just tapped it in myself, and it appears to be working okay. So it could be a case it's not working for some people. Is it working for you, Bob?
Let me look at the new link now. Yep, the new link is now working. So the first link looks like it may have had a period at the end or something like that. So the new link that was just posted, that's the one you want to use. So thank you for those who are pointing that out to us.
Cool.
All right, so in answer for the cash basis question, we file on a cash basis because we didn't know any better. We started 20 years ago, unsure how to make the switch from cash to accrual. Do you have advice on that, Russ?
Look, it really is about picking a moment in time, really, to do that switch. It's not too much of a big deal. I would probably argue that your accounts are not that accurate at the moment, dealing on a cash basis. So I would look ahead to the next period that you can actually do that. Quarterly is probably a good time. So I would speak to your accountant and aim for the 1st of October as being the time that you make the switch to accrual accounting. Or because you guys work fiscal years, maybe you could even start from the 1st of January 2022. But it's just about looking ahead and planning.
All right. Actually, there was a couple questions here that I probably should have jumped in front of. They're very good questions. So, Build Tools was originally released about 10 years ago to the general public, and it was rewritten and published again in a newer version called version 2 in 2018. The majority of our customers are on the second version, the Go Forward platform, but there are some that are still on the original. So there are a couple of people on this call that are on the original, and so call that version 1. So if you're on the original version of Build Tools in version 1, you will not have access to the WIP report that we're talking about. If you contact us through our support department, we would be happy to get you in line for a conversion to version 2. We do them over the weekend, and we've been doing them every weekend for the last 6 months. So we would be happy to get you converted over and introduce you to training, both at the mechanical level and to help you with your cultural adoption of the product within your organization. So just reach out to our support department. We'd be happy to do that. All right, a few more thank you, and it looks like the link was successful, Russ.
Cool. You do that upgrade free of charge, do you, for your clients? That's fantastic.
We do. Free of charge. It is on a new pricing model, so for some the monthly subscription is gonna change a bit, but we do the actual conversion work and go right to the new platform free of charge.
Well, I can say whatever the difference is, it's going to be well worth it, because this is a game changer when you start calculating your WIPA. Because what it does is it changes the psychology of the business owner. When you understand your work in progress figure, you understand your accounts, and then you truly understand your margins. And this is the biggest game changer we see for builders. When they truly understand how much or how little they are really earning on each job, then they start to put their margins up, and then they're always amazed at how easy it is to increase their margins.
That's a great point, Russ. And I've had an opportunity to speak with some of the builders that are members of the Association of Professional Builders, and I got real similar feedback to what Russ just said. It really doesn't stop at calculating WIP. That's really just the beginning. It really doesn't stop in understanding your job cost and managing your projects within Build Tools. There's a lot more to learn in this industry. These are great tools that are available to you. Highly recommend, if you have not already, look into some of the other resources that the Association of Professional Builders has. The training that they offer, the on-site training is phenomenal. The coaching is phenomenal. And like I said, I have talked to some builders in there that once they understood the numbers and how to market to their prospects, how to move forward and manage their projects and some of these best practices, they were absolutely able to raise their margins and go right along with some of the figures that Russ has pointed out earlier in the presentation. All right, we are at the top of the hour, so really appreciate your time here, Russ. This was great information for everybody. It looks like we are done on questions, so thank you everybody for attending. And if you are interested in learning more about the Association of Professional Builders or Build Tools, there are handouts that are located in your panel that you can click on and see. You can look at us online from a Build Tools perspective. You can go to ecisolutions.com/build tools, and we would be happy to work with you. So thanks again, Russ, and thank you everybody for joining us here today.
Thanks so much, Bob. Thank you, everyone.
All right, have a great day.